This is Justin Pulitzer. This is my weekend review for the week ending September 7th, 2014. I've got a lot of stuff to cover, so I'm just going to jump in as usual. A lot of this will be a combination of some good housekeeping. I'll mention it with in the trades, and I'm hoping to get to some questions, but I'm going to really try and cover 10 symbols today, so let's just do it. So SPY came down, and from this high, we broke through the secondary trend line, the 50-day moving average here. This was on that Russia news. We bottomed out here with around the 100 MA and the primary trend line, and then came back up to make a new high. And we've just been in this consolidation chop range all week. My thinking is that a lot of people probably got short here on Wednesday and Thursday because you had reversal bars and they were taken by surprise by Friday. You did come down and you made a newer low, but then you closed back up above the body of Thursday and well above the prior day's highs and really close to the all-time high. So my thoughts are with SPY is that it probably, if it does get above this 201.58, it'll probably see the full 161.8 Fibonacci extension up to the 204s. Again, we have to clear that high first before that move can happen. But if it does, that to me would make a lot of sense. If we come back down, we would probably see the secondary trend line in the 20 MA. Possibly the 50 MA at the very least. That would also take you mid-range here. I had discussed those levels last week, the 97s. If those happen to fail, you'd probably start seeing, this 50% Fibonacci and even the 61.8, which would probably at that point coincide again with the 100 MA and also primary trend. So let's just keep our eyes out for those possible scenarios. Again, this is to me looking really just like we're in range. If we do get that move, but let's not anticipate. Let's wait for it and go with if it happens. If we do get over that 201.58, we'll probably, like I said, see that higher level. If we do come down, let's first target the 97s, which would coincide with these MAs in the secondary, and then after there, we would discuss other time frames with 50 and 61.8 fibs coming into play. I had discussed a little bit on QQQ that we had this breakout, and there was a lot of questions to me on the stream where the support would come in, and there's also a lot of concern with Alibaba's IPO that the big Q names might start seeing some liquidation to fund Alibaba. So I just figured let's do it. Let's do the chart. So the worst case scenarios here for Qs, again, if this gets above, I think we're going to, against these highs, I think it'll continue with the SPY and make new highs. If we do happen to get the pullback, where will it stop? The first stop would be the breakout area, and this is very healthy price action. For stocks to break out and then to come back and just retest, still very normal. This would be around the 97.51, which would also coincide with, it's a little bit below the 20 MA, but we might even stop ahead of there at the 20 MA. It also coincides down here if we do happen to come through a little bit, like, a little bit more into range, which is still very normal again, which would coincide with the 50-day moving average. And this pretty beautiful trend line that is held, it held well here, 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 and then presumably it would hold well again here, and you also have the 50%, the 50-day MA holding it up. If this does happen to snap, then you start risking some more downside. And to me, that downside would be obviously to these reference lows here, and then that could potentially set up for a head and shoulders scenario where you come down here, then retest higher with a lower high, and then come back down, obviously, to these the 50% fib, which 50 and 61, which is really this breakout area, which I think would probably support fairly well. And then if you did really get the completion of the head and shoulders, that would take you down to the 87.44. I don't really see that happening at the moment. I'd have to see this trend break. Again, we always discuss time frames. We're still in this time frame, which I've been referring to as the now time frame. The now time frame here, to me, only we'd have to, the first level that they'd have to take out would be this low in here. Let's just call Friday's low, actually, because that was such a nice reversal day. So let's just say 99.03. And if we took out there, then we start looking at a move to this trend. I'd have to see that trend snap to start discussing the other scenarios. but I think that holds for now. Let's take a look at another one that's a really key stock here, which is Apple. I have a lot of different time frames in this chart, so I'm sorry if it's a little muddy, but we had I had discussed using measured moves to figure out where the upside target in Apple would be, and I had discussed that I thought it would be in the 103s. And I mentioned that in last week's video, and I had said that I thought that Apple was going to be a sell up there to start taking profits, and that actually was the case. You can see we got up there, we got a little bit further than I expected. I had only expected, remember again, 103.25, which was a big fib extension, and then it broke pretty badly. I mean, this is a very big engulfing candle. You took out primary trend, you took out the 20 MA, but where did you really come back into? You're taking out the past high, which is not really such a good sign. Let me just bring up the time frame a little bit tighter here. Here we go. So what we really did was come back into this fib area, and remember the last time, which was down here, the 61.8% fib and the 50-day moving average had coincided with a buy point. So I'm thinking again that happens, and if you look on a bit of a larger time frame, which was from that low that we had used the last time to the high, that you start getting a bigger time frame, 50% fib and 61.8 coming in here between 96 and 95, and I would think that area probably gets some support with Apple. If that does happen to break and we do come back down to retest the entire move to 93, then I'm going to start thinking that we're looking at maybe sell the rips types of moves. I really think the onus is on the Apple bulls here to really take back a lot of this weakness. And for me, that would have to be somewhere with you'd have to take back at least half of the from the high to the low. So my thoughts there would be somewhere. I think it's 100.77 to 100.89. Let's just keep it simple, stupid, and call it 101. Apple bulls really need to get Apple back up over 101 for me to think the chart is starting to really repair itself. If that does happen, then we could start playing Apple to the long side again on momentum for a move higher, maybe up to those 109s, which was the next really big fib extension. But my thoughts are, how do we trade Apple into the event? We have the event, and then we have some earnings coming out. The event actually has some pretty high IV priced in. You can see it's 44%, and the more typical IV for Apple is really down in the mid-20s. So my thoughts are on Apple is that the move is going to be to sell out of the money premium for a volatility crush on Apple, particularly if it goes into the event week. I mean, you had people here that were trying to front run selling the news, and they've already really taken the stock down a lot. So if they do continue to take Apple down early next week into the event, then I think you sell those those out of the money puts maybe for either a vol crush or for some type of a move back up. You may even see intraday some type of a spike down or low, but I mean, I don't really see the risk being the same with Apple if the move has already happened. So let's take a look at what's probable. Let's not talk about what people may think or what their opinions may be. Of course, my screen here is nice and frozen, which is going to screw up this video a bit. Let's wait for that to unfreeze. In the meantime, here we go. Sorry about that, guys. If you take a look at the probability of touching, there's about a 50% chance, a little more than 50, that Apple gets, based on this expected move, that Apple gets down to 95. So I think that if you want to play, have better than odds of a coin toss, you can sell those puts or lower on any moves, preferably lower on moves down. And if you take a look at what the probability of those are actually expiring worthless, this starts getting pretty high down here. I mean, the 94s are almost 78%, and then the 93s are over 80%. And if you remember on that chart, we had discussed that there was a lot of support down in that area. So I'm thinking on a very short now, quote-unquote, time frame, that would be some good put support to sell premium into. Let's take a look at some more Momo. Last week I had discussed Facebook. I had thought that the pattern was still pretty bullish, that it was holding this little bit of a baby trend line, and then it was really just hugging the 20-day moving average. We got the move back up Here, unfortunately, we had some selling with the market, and it was starting to show some signs of reversal. Again, here, the same thing. You tested up to these highs and came back, but then Friday, you really came up nicely. Finally, we got the close over the high from the earnings gap. So anything over 76, 74 to me is really pretty bullish. And if we take out these highs, I'm thinking Facebook probably can run into the 80s, maybe 80, 85. We'll have to see. A lot of that also will depend on market strength. On the bear scenario, if we do happen to take out this trend line, I think we see the 50-day moving average really fast and a retest of these lows, and probably the into the primary and secondary trend lines. I'm thinking Facebook is bullish though, so my guess is we go this way. But please be on guard in case that does happen. We always like to manage our risk, and if you're wrong, you're wrong. You don't want to take losses. But Facebook again looking really bullish to me. Another social name that I think is pretty bullish is also Twitter. We had that earnings spike up, had a bit of a sell-off. There were some responsive sellers. Let me show you on a larger time frame in case you happen to miss last week's video. Let's go a little bit more than that. 9 months apparently wasn't even enough. See, you had this spike up for after the IPO, and then Twitter really was not very bullish after that. It was coming down. It had this big gap here, tried to rally up, and then just meandered. And then once you broke here, this 50, let's just call it 50, you really cascaded lower and finally bottomed out at 29. My call had been that I thought it was a buy. I sort of got a little bit more bullish here in the mid 30s, thinking that it was going to go back to $50. And we did actually in the after hours on the earnings, but it backed off. And then I had discussed in last week's video on the what I'm calling now the now time frame that anything above 48 is bullish, and Twitter has really has held in really well. You've had a little bit of a back off. I know that a lot of people think this was a big reversal bar and are really trying to short against it. But for me, anything above 48 is bullish, and anything above 50 is even more bullish. Looking for a move back into like the 50, really into the 52 or higher region. We kind of got there, and I guess you had some responsive sellers there. But as long as it holds this consolidation pattern, very similar to Facebook, as long as it holds this trend, I think it's bullish. If we started losing that, then I'd start getting a little bit more bearish and thinking, maybe we come back down to test trend again. But as long as we're holding this 20 MA, I think anything over 20-day moving averages on Momo stocks is bullish, and for sure with trend and over gap highs, it's looking solid to me for an extension higher. New to our discussion is obviously not new to you guys, but new to our discussion in terms of my weekend videos is Google. Google has been sort of very choppy stock. It had come up here for a lower high, which we don't like. We like higher highs and higher lows, and then actually came down here and started to break this pattern here. See, Google had been in this this bottoming kind of pattern, and it came up with higher lows and higher highs, but then here started violating that with a lower high. But here we took out here we came down, we made a lower high, but here we made a higher low, and now we're coming back up here, breaking this little bit of an intermediate downtrend line here, which I think is wildly bullish for the stock to play a little bit of catch up. Maybe I shouldn't say wildly bullish, but it's bullish. Breaking this downtrend line and then coming back up and then actually closing over this other high. So my thoughts here is that if the market holds up and if the Qs are okay, Google will continue up and probably retest this other peak of this 608, 609-ish level. And then maybe even if the Momo continues, I'm looking for a retest of that 615 and then we'll reevaluate. It could even break higher, but we always like to look at reference levels. This is a responsive market again. People look at these levels, all the technicians look at these same levels, and they will become targets and they will become sell points as well. So just don't get crazy and ahead of yourself with these stocks. Another one that I've been talking about, it feels like at infinitum, is Netflix. Netflix has been holding its own pretty well in this market. I discussed last weekend that it was a bit under caution now, not bearish, but under caution, because we had broken this steep uptrend line, and it was doing it more by time, more than time by price. And we've really just been in this consolidation area. You could even see Netflix came up and made a bit of a new high here this day. It did have some responsive sellers though, and it still came back down. But we're again over the 20-day moving average and still consolidating up around these old highs. As long as Netflix holds, I think, over the 20 MA, it's still a buy the dip type of stock. If that snaps, I then think that we could possibly see these 457s and possibly even 450s to retest that 50 MA and a 50% fib, which also coincides with the top of this big body candle. Again, I'm thinking that the more time Netflix spends building out sideways puts the play to 500 makes it more and more likely. This was getting a little bit steep and needed a little bit of cooling off time. It seems to be doing that. So let's just keep an eye on that. I'm sort of a little neutral on Netflix here in the short time frame, but any move back up over, let's say, 481.69 here would probably get that move going, because this was a bit of a follow through of this reversal day. So if you could start taking out all of these bodies, I would start thinking that Netflix is probably going to start continuing higher. Another big Momo name that's new to the video is Priceline. It's been a bit of a really choppy chart. You had this big high, you had this breakout here. You made this high up here. It was almost 1380, 1378, and then you just completely dropped for a 291 point plus decline. Wow, talk about massive pain. The stock did happen to recover though, and then came back up with a bit of a lower high, obviously a lower high, really, which was where the breakdown of this move started. Came back down for a 109 point decline, rallied up with a bit of a into this kind of chop range, and then here we started making higher highs. The problem with Priceline was on earnings here. It made a minorly high move. It didn't close particularly super strong. It did close a bit over these old highs, but it didn't have any follow through, and you could see it really just lost it, and it sort of broke this pattern of slightly higher highs. You can see it's in this green line. I have it with ovals. Get rid of these ovals. Remove drawing. Let's remove that drawing too. So you can see we broke. We had come down here actually and test the 200 MA, and then on a downgrade it broke the trend and the 200 MA, and then this was a bit of a gap and go. It was pretty bearish on Friday. But if you take a look in the big picture here, what did we really do? We came down to a 61.8 Fibonacci level, which also coincided with these reference lows. And you formed, let's get rid of this. This is for measured moves. You formed a bit of a bottoming tail hammer. So my thoughts are with Priceline is that you probably will get some type of a bounce back up. This is a lot fast. I mean, this thing just got super steep. I think if you want to own Priceline, you could do it against the low of the day, which didn't exactly hit the fib level. It was a little bit lower, so 1182. Let's call it 1180-ish. If you want to initiate or sell some premium, this might be a good area to shoot against. And my thoughts is that if Priceline gets over the high of the day that day, which was 1211.40, then it's probably going to have a buy, and it's probably a buy for a little bit of a bounce into range. And my thinking is that maybe to here, right? Let's see. This was really where it took off, so this is where it would bounce to. So that's like 1236, 37. You know what? Let's do a fib retracement on that and see what that comes up to. I would think if you're at the very least in the shortest of time frames, that Priceline is probably going to get to at least the 38.2 fib retracement, and let's see what that coincides with. And snap up. Wow, look at that! Wow, look at that! It got right to the level we had discussed. Let me take these suckers off here. This would just be a very short time frame. Again, this is sort of like my now time frame, peeps. I know you guys are loving this stuff. So wow, that's really right there, 1237. Huh. And that also coincides. Look at this with this downtrend line from this high, this past high. Ignore this. This is just the fib level that's showing itself. But my thoughts are, if you do get over this high, you probably continue the bounce into that, let's say, about 1237-ish. So that would be for a day trade or a swing trade if we get over this high on, let's say, on Monday or Tuesday or whatever, the 12/11/40. So set those alerts. And again, if you want to sort of front run it, I usually like to wait for it. But if you want to front run it, just use this low here, below this fib, this 61.8 fib is your stop. So that's price line. Now for Tesla, let's do it. Let's get it done. Let's get her done. Tesla, I know you guys who have been following me know I've been in like this very heated battle with people on the stream about this. And my long call had come when I had broken this downtrend line, and I had said that I thought it was going to come up and retest the old highs at 265. So we came up, and this was actually the day I had gotten out of that particular trade. I did it really near the highs. This was on I still haven't bothered to look it up, but a tier firm 1 upgrade, and I usually like to take upgrades near highs as sell points, particularly if they're from Goldman Sachs. They tend to be the dinner bell ringers, but this wasn't Goldman Sachs. So anyway, Tesla, I wanted to see how it handled itself, and she handled herself pretty well. She was bouncing around here, tried for a new high, and then kind of broke out of this range here. And I had discussed that it was a buy up over this reversal hammer here for a re-entry, and the high of that bar was 259.33, and I had posted it on the stream. And we had chopped for a couple of days, and then we had a little bit of a gap, and it was the gap went gap and go, and we got up here, and we were just kind of bubbling under and just consolidating under the highs of the prior move, and then we got our price action that we had been looking for. We got this little gap up, and then the continuation and follow through, and my thinking here was that we were going to get to 300 on Tesla, but I had made a call actually on this day here, and that was to book some profits, and that was really close to 290. The stock had been very choppy intraday here. I knew that there was news that day. This was the Gigafactory release day. That's actually what caused some of this action, and I kind of figured that we were starting to get into the time frame where it was time to book some profits. So my call, if you take a look, was no, it's not this one. Where was it? Here, book some profits. Book some profits in some Tesla, and don't be a pig. And this was at 2:15 p.m. My tweet, and in all likelihood, you probably got filled with that around 290. And I'll show you on the chart style that this is real stuff, that this isn't just talk, these videos. This is what's really going on and what I'm really doing in real time in trading. And you can take a look on here. This was the bar here, 13.15. So this was equivalent to 215. I sent out the tweet, and that turned out to be the high of the day, the bar. It did get a little bit higher. You got to 291.42. If you took my tweet, you probably got filled somewhere in the high 289s or 290. It was basically about 290 was my thinking on this. And then from there, you did get a little bit more. But after that, you had a lot of selling. This to me was probably getting a little late in the day for such a spike. I usually like to use round figures at that point for sales, and I was thinking that anyone who was trading on the day time frame would probably be a seller, and whammo, boy, did you get your sell off and pullback. So what now? I had said that to another follower who had sent me a message. They had asked me if it was buy the dip in Tesla or wait for a larger dip, and I said I'm waiting a bit. I want to see how she handles herself, like for a pullback. And my thinking on the pullback here was that I wanted to see if we held this steep trend line, and my thinking was that we could possibly, as I had discussed with the Qs, possibly come back to retest this 265 level if we lost the low of the day here. I had actually tweeted out for the quote-unquote now time frame, that 280.40 and like 280 half-ish was sort of the level the bulls need to hold. They didn't, and it did come down a little bit more, although we did close with a little bit of a hammer. It wasn't that strong of one, but it still is over the secondary trend line. My thinking with Tesla is that anything over 265 is still a buy the dips. It also would coincide well with the 20-day moving average, and as you guys know, again, I always like the 20-day MA as the judgment for Momo stocks. If we do happen to lose this, though, I know you Tesla bears want to hear what the bear scenario is. My scenario for then would be that we pull back a little bit deeper, and we probably retest this 50% Fibonacci and possibly the 61.8 down into the 240s. And by that time, if it is choppy, it would probably coincide with the primary trend line. I don't know where that would be at this point, if it comes down super steep or if it kind of chops and comes down. My thinking is that a lot of these shorts are still really wrong here, and that this stock could probably hold in pretty well. But that's the time frames. If you're on the now time frame or you're looking for the day trade setup, my thinking is that if you take out the high of Friday, which is 282.90, you probably get a play back up to the highs, maybe even to the 300 move. But anything below this Friday low is to me a little bit more bearish, at least just in the very short time frame. Just for a move back down to retest that 265 breakout. Anything above there would be pretty bullish to me, because you would be back over the low of this reversal bar day, the back over this you have a little bit of opposing tails here. You'd be back over this this sell-off day, and then really still in pretty much clear air. There's really nobody wrong who's long Tesla, other than if you were dumb enough to chase it, quote unquote, to buy up at the very top. But I'm thinking that the stock is still a buy the dip stock until I start seeing trend for sure, secondary trend break, the high, and then I would think that the primary trend here would probably hold for Tesla. So that's my weekend update. I had a question about how I use technicals, internals in the SPY for trading. It sort of, for me, is just putting things into context. I think I'm going to do a separate video on that, though. I don't want to keep this video too long. So I will address that in a further video. So thank you, guys. I appreciate your time. I hope my videos help. Be sure to like my video, please, if you enjoy it. And definitely, if you have any questions, just leave them in the comment section, or I'll probably answer faster if you just message me on Twitter. My Twitter handle, again, is @JustinPulitzer, Pulitzer like the prize. So I look forward to discussing with you guys, and have a good trading week.